Arista Networks just had one of those classic AI stock shakeouts that actually gets traders more interested, not less. After its latest earnings report, the stock fell sharply, even though the company delivered strong revenue growth and beat expectations. The drop came mainly because guidance for the next quarter didn't blow away Wall Street's already high expectations, and investors reacted fast, sending the stock off a cliff in the short term. But underneath that volatility, the core story hasn't changed. In fact, it's arguably getting stronger. Arista is deeply tied into the AI infrastructure build-out, providing high-speed networking gear that powers data centers for companies like Microsoft, Meta, and Alphabet. That's a huge tailwind because AI models need massive data movement, and Arista sits right in the middle of that demand cycle. Even with the recent pullback, analysts see the dip more as a reset than a breakdown. What's keeping bullish investors confident is that Wall Street hasn't turned negative at all. In fact, most major banks continue to rate Arista as a buy, with firms like Goldman Sachs, JPMorgan, Morgan Stanley, and TD Cowen all maintaining overweight or buy ratings and raising price targets after earnings. Some of those targets have moved up into the $180 to $210 range, showing analysts still expect meaningful upside from current levels. Even more important, sentiment across the street remains strongly bullish overall, with consensus ratings still sitting in buy territory and average price targets implying double-digit upside from current prices. Analysts are basically saying, yes, the stock got ahead of itself short-term, but the long-term AI networking demand story is still intact. Another positive is Arista's fundamentals themselves. Revenue is still growing at a high double-digit pace, margins remain strong for a hardware company, and cash flow generation is solid. The company is also expanding beyond hyperscalers into more enterprise and campus networking, which gives it additional growth runway outside of just big tech spending cycles. So when you put it all together, Arista looks like a classic AI infrastructure name that just went through a healthy reset. The stock got hit hard after earnings, but analysts are still raising targets, banks are still bullish, and the long-term AI demand story hasn't slowed down. If AI infrastructure spending continues accelerating, Arista is one of the names positioned to benefit directly, and that's why many traders are watching this pullback closely as a potential re-entry zone rather than a trend reversal. If you found this breakdown helpful, hit that like button, and if you're new and want daily stock updates, hit that subscribe button. Thanks for watching, and I'll catch you in the next one.